Hello, my name is Rachel and welcome back to my channel. So in today's video I am doing something a bit different. I will be sharing with you the portfolio that I have put together for my husband's self-invested personal pension, or SIPP. So he has a workplace pension which he pays into, but he also has a couple of older pensions that he wants to put into a SIPP, and he is not particularly interested in investing, and so has asked me to put together a portfolio for him. So that is what I'm going to be sharing with you today. This portfolio contains quite a lot of ETFs, so it's 70% ETFs and then 30% funds and trusts. So the focus is kind of on ETFs in this portfolio. The reason being is that it's not something that we want to monitor regularly or make frequent changes to. It's simply something we want to put together and then leave. So in today's video, I'll be sharing with you the 7 different ETFs that he will be putting into his own self-invested personal pension portfolio. I'll also be sharing with you the 3 actively managed funds. I'll be talking about the allocation of each of these different investments into the SIPP and talking through a little bit about the reasoning as to why I have chosen these specific investments for his self-invested personal pension. So I'm going to break this video into a section on ETFs and then secondly a section on funds and trusts as well. So if you already know what a SIPP is, then continue watching. If you don't know what a self-invested personal pension is, then I will link a video here in case you want to check it out in a bit more detail. This self-invested personal pension will be with AJ Bell. I have my own personal self-invested personal pension with AJ Bell. I've done a comparison of different providers. If you want to check out that video as well, you can do. So we're going to use the same provider to keep things nice and simple. Okay, so starting off with the ETFs. The ETFs in this portfolio will be from a range of providers, so Vanguard, iShares and L&G as well. So I'll go through these in order, and the order that I'm going to go with is from the lowest fees all the way up to the highest fees. So as you probably know, when you're looking at your investments compounding, fees can be so important to consider because you don't want to lose out on any of your investment value through expensive fees. ETFs are widely renowned as having lower fees, so that's fantastic. So I'll be going through from lowest fee all the way up to highest fee. So I'll be starting out with some of the more popular ETFs that you might have heard of, and then moving on to a couple of more thematic ETFs which focus on a specific theme. So let's start with number 1. It is an obvious choice. It is Vanguard's S&P 500 or VUSA. So the S&P 500 and Vanguard's VUSA has not performed very well in the last 6 months. It's currently down 5.83% in the last 6 months. Now I personally don't see this as a negative. I see it as a good time to invest when the market is going through this correction or crash. So moving on now to the next investment with a low fee of 0.14%. It's Vanguard's FTSE Developed World excluding UK Equity Index Fund. So I've chosen to choose the version of this fund that excludes the UK because its historic performance has been slightly better over time. Obviously you could choose the version that includes the UK, which is Vanguard's VV or VEVE, if you wanted to get exposure to the UK, but for me personally I'm happy with excluding the UK for potentially higher returns in time. So the 3-year annualized return for this investment is 11.90% and the 5-year is 10.48%. These are the figures that I'm giving you from today. Obviously please go away and do your own research. Always check everything that I'm telling you and make sure that you feel confident in the investments that you're making for yourself. Don't take what I'm saying as fact. So the reason that I wanted to add this ETF into this portfolio is because of that worldwide exposure. Obviously I've selected excluding UK. I am from the UK myself and I'm a big fan. So almost 70% of this investment is still coming from the US, then the Eurozone is 8.75%, Japan 7.21%, Europe excluding the Euro 5.16%, then Canada, Asia Developed and Australasia. So that is the breakdown of this portfolio. Obviously it is still heavy on that US exposure, and with having the S&P 500 already in this portfolio, I do understand that there will be some crossover. So some of the companies that I'm holding in Vanguard's VUSA will also be held here, but I'm okay with that, I'm comfortable with that, and I'm aware of that. Okay, now the third ETF that I'm going to be adding into this portfolio is IITU. And as I've just been talking about the S&P 500, I'm going to be talking about it again. This is an S&P 500 IT specific ETF. So it's taken all of the companies that are IT or information technology specific out of the S&P 500 and put them into an ETF. So this is managed by iShares. Its 3-year annualized returns are phenomenal at 22.89%, and its 5-year annualized returns at 21.64%. So really, really strong returns, despite the fact that the tech sector has dropped considerably recently. So I actually compared this to a lot of the actively managed funds that were in the tech sector. And actually the fees were so low for this at 0.15%, and they were actually beating the actively managed tech funds that I looked at specifically. So they were Polar Capital Global Tech, and then also, what was the other one? AXA Framlington Global Tech, I believe, was another one I looked at. So yeah, 0.15%. It has 76 holdings. So as I said, there will be crossover again here with the S&P 500 because it's pulling out those 76 IT holdings from the S&P 500, but I wanted to include this in this self-invested personal pension portfolio because the historic returns are so strong, and I wanted to have a tech-specific ETF in this portfolio. Now moving on to another ETF that has had better or stronger returns than the S&P 500. It's the iShares IV PLC MSCI USA SRI ETF. What a mouthful. So the short code for that is SUUS, which I probably should have started with that rather than going into the full name. So 3-year annualized returns for this are 17.68%, and 5-year annualized are 16.53%. So the ongoing charge for this is 0.2%, which is really, really good. This ETF obviously focuses on the USA, but it's focusing specifically on socially responsible investing. And the returns are very, very strong as well. This will make up 15% of this portfolio. Now I'm going to be talking you through 3 different ETFs that I will be adding to this self-invested personal pension portfolio, and they are all thematic ETFs. So I thought it was important to flag this because some people are not fans of thematic ETFs, so that'll be when there's a specific theme, it tracks the index for that specific theme. So for example, we have a clean energy one in here, so it will have all of the clean energy companies available and track that index. The reason some people aren't fans of thematic ETFs is because the fees do tend to be a little bit higher, and also they do tend to be more concentrated in their holdings, which almost goes against the ETF ethos, if that makes sense. But I wanted to include 3 of them, but please do look at them with caution. Check that you're comfortable with the fees, and also check that the theme that they are investing in is something you feel confident in investing in. So the first ETF that is a thematic ETF that I will be including is the BATG, which is the LNG Battery Value Chain ETF. This is one that I hold in my investment ISA. Its 3-year annualized returns are 26.65%. So very, very strong. The only thing that I would caution as well for this, as well as it being a thematic ETF that only has 38 holdings within it, it also is not been established very long, so it does not have 5-year annualized returns. So when you're looking at these different investments, this is something that's worth considering. Okay, now we're moving on to the second thematic ETF that I'll be including in this portfolio, and it is the iShares Agribusiness ETF. Now the code for this is SPAG. It just makes me think of spaghetti bolognese and not agriculture, but there you go. 3 annualized returns for this are 19.69% and 5 years are 13.55%. So this is obviously, as it sounds, an agriculture ETF, so very specific to that. It has 74 holdings, but what I was trying to do with these thematic ETFs is get some holdings in there that aren't in these really popular S&P 500. So obviously these companies are very specific to their niche, and therefore there's not going to be much crossover with the S&P 500 or with the technology sector. I wanted to go quite specific to diversify further into different areas. Okay, so finally moving on to the last thematic ETF that I'll be including. It is the iShares Global Clean Energy. So the code for that is INRG. Its 3 annualized returns are 23.18% and 5 year are 17.86%. So obviously this is holding clean energy companies, so Enphase and Consolidated Energy to name the top 2. It has 99 holdings within it, and the ongoing charge is the most expensive of all of these ETFs at 0.65%. So those are all the ETFs that I'm going to be including in this portfolio. I wanted to also mention that I have tried to keep the fees low in this portfolio as a whole. So all of the ETF fees are, as I said, below 0.65% or 0.65% for the clean energy one. And moving on to the funds and trusts, the fees are all below 0.9%. So keeping the fees below 1%. So I think often with actively managed funds and trusts, there is a lot of conversation about the fees being very, very high, but actually for the ones I've included, they are quite similar to the ongoing charges that you will see for the ETF. So I just thought that was worth mentioning and quite important. So moving on now to these actively managed funds and trusts. Now, it's also important to note that a lot of these actively managed funds and trusts have dropped considerably in the last year. So many of them did very, very well in 2020 because they contained a lot of growth stocks that did very well. So many of these, I think almost all of them, were up almost 100%, if not more, in 2020. And we are just coming back down now to earth a little bit with these. So they have dropped considerably in the last year. So again, as always, this is going to be a long-term investment for me. I am comfortable that these have dropped considerably in the last year because I will not be touching these investments. Well, my husband, I won't be touching them at all. My husband won't be touching these investments for the next 20 or so years. So the first one is Baillie Gifford Positive Change. The fee for this is 0.53%, so not too dissimilar to the fees that you're seeing with the ETFs. 3-year annualized returns are 19.96% and 5-year annualized returns are 19.19%. However, as I said, it hasn't had a great year, with it dropping 14.47% in the last year, but I am comfortable with that. This will just make up 5% of the whole self-invested personal pension in its entirety. Okay, so all of these are actually Baillie Gifford funds. They have had a tough year, all of them, but over the long term should recover, and they have historically been very volatile, and I expect no different. So it's quite nice to have a high percentage of ETFs that should hopefully be less volatile to counteract these 3 funds and trusts which can be particularly volatile. The second one is a Scottish Mortgage Investment Trust. 3-year annualized returns are 14.06% and 5-year are 15.43%. Ongoing charge is 0.56, so not bad at all. There's 70 holdings within the Scottish Mortgage Investment Trust. I actually have a separate video on this trust as well. They predominantly focus on investing in growth stocks, which is why they have not performed particularly well in the current investment environment. The big caution mark with this is it is currently down 30.93% in the last year. So it has been very, very volatile. So please do your own research before making an investment like this, because you have to be comfortable with that level of volatility. I personally am comfortable. I don't find it, I obviously find it a little bit uncomfortable, but I'm happy to carry on holding the Scottish Mortgage Investment Trust. But if that kind of level of volatility would make you feel uncomfortable, then perhaps consider if it's the right investment for you. But yeah, as I said, this is something we're going to be holding on to for 20 or so years. So moving on now to the last investment, which will be investment number 10 of the self-invested personal pension portfolio. It is the Pacific Horizon Investment Trust, or PHI. So this has had phenomenal 3-year annualized returns of 26.47% and 5-year annualized returns of just over 20%. The fees for this are pretty high at 0.9%. We're getting closer to that 1% fee. It has got a nice level of diversity within this portfolio, 103 holdings. First one being Tata Motors, it's an Indian company, and the second being Sea Limited. So adding a little bit of diversity to the portfolio, so there's less crossover with some of the other investments by adding this in. This will make up 10% of the overall portfolio allocation. So hopefully you found this video interesting. This is by no means a go away and do this with your own self-invested personal pension video. This is very specific to our needs, and as I said, my husband has got a separate workplace pension which is invested entirely separately. So yeah, this is simply what we're going to be doing with a couple of his older pensions that have just been left to grow on their own. Do let me know if you have any questions in the comments down below. As I said, I think I said before, this pension is going to be with AJ Bell. Simply because of the size of this specific pension pot, the fees for AJ Bell will be the lowest, and obviously I have my SIPP with AJ Bell as well, and have found the customer service to be very, very good. So that's a quick review. If you want to check out a longer review on different personal pensions, then please do. Yeah, that's pretty much everything I've got to say on that. I hope you find this interesting. Let me know, as always, if you have any questions. Thank you so much for watching till the end if you've made it this far, and I wish you all the very best with your own personal investments.